Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Joining us on the show today is Avinash Gorakhshekar of Joint Ray Capital Services, and he believes that the market will remain consolidated zone but trade with a positive bias. Umesh Mehta of Samco Security believes that the markets are in a correction mode, and Ashwin Agarwal of Newberry PMS says that the market is trading above its fair value. Today on Hot Stocks, we will discuss stocks like Idea Cellular, Oberoi Realty, Suzlon, Century Ply, Just Dial and Graphite India. Let's talk with the first stock, Idea Cellular. Is the worst over for telecom stocks? Umesh, let me start with you. Do you like Idea Cellular? What's your view?
So Idea Cellular had a legacy issue. They have the equipment costs were high. The technology that they had invested has become obsolete. The Volt is a new technology. They have paid huge spectrum amount. So I think that all those structural problems, in order to come out from this, they had no other option but to merge, so that at least they can reduce cost to create an operating leverage. So I think on a longer term basis, really efficient technology is and a low cost technology is going to create shareholder wealth, which Idea and maybe when they merge with Vodafone will be difficult for them. So I think that's the biggest structural problem they are into, and therefore our house view is to avoid.
Ashwin, do you agree with Umesh? He is negative on it. Are you bullish or bearish?
I'm pretty bullish on Idea. So post the merger, assuming the merger goes through, if not, obviously it's a sell, but if the merger goes through, they become the largest player in the telecom sector. The consumer is a little sticky, like not a lot of people necessarily change their carrier, like the operator. So it will have customer retention to some extent. Coming to the financials, I think if you take, so Reliance is offering free voice. So if you assume the telecom industry goes to a zero revenue from voice structure, and if you assume that Reliance continues with its most aggressive pricing, which is 350 rupees per month for unlimited data and unlimited voice, that the ARPU would still be double of what it is today, from 1800 to 4000. So basically, even if you assume the worst case scenarios, the industry revenue will grow 10%. I think they will maintain market share, or they might say even if from 40% post merger, if they drop to 35%, that's still a respectable figure considering the valuations today. But I think the real way they will really increase their margins is on the cost side, where they will negotiate with their IT vendors, and they're going to negotiate with they'll have fewer headcount. They'll negotiate with the dealers and tower companies. So I think overall their margin should expand over a next 5 to 10 years.
What's your view? Umesh is slightly neutral to negative. Ashwin is rather bullish. What's your view on Idea?
No, I think the merger would definitely be long-term value accretive, but in the near term, at least for the next 2 years, I think there are going to be many challenges. First is the interconnect charges have gone. By 2020, they are completely abolished, so that gets directly hit, and that would be a pain point for Idea. And more importantly, any merger would obviously require some time. My sense is, what shareholders would gain from this merger in terms of a bigger balance sheet, in terms of a bigger market share, I think would have to be spelled out in actual earnings terms. And unless that gets cleared, I think the market is waiting for a lot of clarity on this merger. So prefer to wait rather than jump the gun now. I mean, it's better to actually let the consolidation, the merger happen, and then let's see how things pan out. But in the near term, I think you're going to see continuous pressure on the ARPUs and the margins.
Okay, so that's the view that's coming in on Idea. Umesh and Avinash are not at all bullish on Idea, but Ashwin does believe that there is value for Idea. Moving on to the next stock, and that's Oberoi Realty. The Nifty Realty Index has been a marked outperformer ever since demonetization. It's worked opposite of what the people were thinking. But what's the way ahead for organized real estate player? Let me start with you, Avinash. Do you like Oberoi Realty? Do you think that it deserves a buy?
Yeah, I think Darshan, if you look at the quality of the balance sheet of Oberoi Realty, the quality of their construction, they have a very strong brand, and most importantly, the kind of 60-acre land parcel which they have purchased. It's a very attractive kind of parcel bought at a reasonably good cost, and they have a decent leverage on the balance sheet. Roughly 700 crores is the net debt. So funding should not be a problem, and I think going forward, the kind of market they have actually now purchased this land parcel should definitely yield them good results over the next couple of years. So all in all, I think they should definitely definitely be rewarded over the next couple of years. So definitely a buy at the current level.
Umesh, your view?
I think so. Oberoi Realty is a premium category player focused only in Mumbai. They are one of the highest profit margin generators in the real estate industry. They have a pretty well balanced portfolio, stable income through Westin Hotel and the Commerce 1 and 2 that they are, that is into office space, the 550 crore deal with GSK. I think so on and all, I think company is so slightly better leveraged in terms of they have a possibility of scaling it up. Because the management focus is to remain in Mumbai, I think so they will be a premium category with high margins, and so I think it's a good long-term bet.
So it's a 2 thumbs up for Oberoi Realty. Is it going to be a thumbs up or thumbs down from
I
Ashwin?
completely agree with both of them. I think it's the best realty company. They have a huge portfolio of projects that are launched, and cash flow will be pretty steady over the next 5 years. They also have annuity income through their mall and office space. And he has a history of deploying capital at the right time. So overall, I would say the next 5-6 years, it's a great stock too.
Okay, so it's a triple thumbs up that's coming in on Oberoi Realty. Moving on to the next stock, and that is Suzlon. Yesterday, development coming in terms of what had happened. Wind power rates were down 26% from the last time. This definitely affects the wind and turbine generators like Suzlon and Inox Wind. Let's talk about Suzlon. Ashwin, do you like Suzlon? Do you think it's a good company to hold?
No, I think it's probably one of the worst companies you can hold. I mean, companies never made money except the last year. They earlier had a subsidiary called RE Power, which had a huge leverage, but it had good tech, but they sold it so to deleverage a bit. But even after that, they don't look that great. Like, there's huge capex involved in the business, so whatever money they earn purely goes to incremental capex. Also, with the wind tariffs coming down, I think probably next year also they won't make any money, so I would say avoid.
Umesh, valid points by Ashwin. Do you agree?
Yeah, correct. So Suzlon is having twofold risk: unsystematic risk and systematic risk. Unsystematic risk is the FCCB conversion, the continuous dilution, the margins pressure, plus the auctions that are happening, are at a lower level. So obviously they will generate lesser margins when the power producers comes to acquire equipment. So on and on, I think so. And so considering the risk, government really needs to put in effort if they want to achieve the 60 gigawatt dream by 2022. But currently, I think nothing is happening from the government side. So I think this sector will become a telecom way if if no helping hand is given by the government.
So 2 thumbs down on Suzlon. Avinash, thumbs up, thumbs down. Do you agree with them, or
I think the points discussed by both Ashwin and Umesh are right. But I think clearly, if you look at the price, my sense is the price has come off from a very large kind of base to a level of around 14-15 rupees. And I think the short-term drag could be the tariff policy, which has actually reduced tariffs significantly. But in the longer term, I think if this company improves its debt position, hopefully working capital improves, and the margins are maintained, I think this is definitely going to be over the next, say, 2 to 3 years. I would definitely like to take a contra call, because in the wind energy space, this company has got a 50% market share, plus it's got a good cost competitive structure. So all said and done, longer term, I don't think there's going to be much to lose from this stock. But yes, in the next 2 to 3 years, this could give a decent upside.
Okay, so that's the view that's coming in on Suzlon. Umesh and Ashwin believe that it's not a stock that's worth holding, but Avinash just believe that for a longer term perspective, I don't think there's anything to lose. That's what you're saying, and it makes value for shareholders. The next stock is Century Ply. Does the GST benefit now come into the revenues of the company? Is that being seen on the ground? What's your view? Let's start with you, Avinash. Do you like Century Ply?
Yeah, I think if you look at the wood panel market, it's a fairly leading player, enjoys a market share of about 25%, and I think clearly the demonetization and the GST has impacted volumes in the initial first 2 quarters. Our sense is that this kind of effect would possibly be completely neutralized when we talk about FY19, and they have a new MDF facility which is now going to be kick-started in the second half of FY18. So this should also contribute. So our sense is that longer term this business is definitely going to be good, because now GST has come. Almost 70 to 75% of the industry was in the unorganized sector. So there's going to be a lot of shift on the organized sector, guys, and obviously Century Ply to that extent should benefit over the longer term.
What about you, Umesh? Do you like Century Ply, or do you prefer someone else in the same space?
I agree with the current view that Century Ply is the biggest player in the organized sector. They are having 25% market share. So 80% of the market is unorganized. So currently unorganized sector prior to GST was they used to sell at lower cost, 10 to 15% was the differential because of duty. So now if everyone pays duty, starts paying duty, I think then Century Ply is a brand. So this, I think they are the larger structural stories. These guys are going to have increased market share. Century Plywood is the largest player, housing for all, the vision of India. So as an ancillary, the new houses will also require plywood, MDF and all those stuffs, and old houses will also require while renovation. So I think over a period of 5 to 10 years, we think this stock will be a compounder. Century Ply is generating ROE of around 31%. So this is one of the most efficient company currently, and going forward, I think this will improve. Going forward, 15 to 20% growth we see in Century Plywood. So it's a long-term buy.
Okay, 2 thumbs up. Ashwin, your view? Thumbs up, thumbs down?
Thumbs down. Like, I like the company, I like the story. I completely agree with all the points these guys made. The only problem is if you analyze the company's financial statements, over the last 5 years, revenues are up 50%, but profits are up 350-400%. So the main reason for this is their raw material cost as a percent of sales has gone down from 60% earlier to 45%. See, at the end of the day, plywood's a commodity business. Obviously, it's branded Century, but still the benefits have accrued because raw material prices dropped. So basically, margins, I think, are at like elevated levels. So the company just said this is the year where they had the best margin ever last year. So I think going forward, basically there was a crash in lumber prices of 40%. Lumber being the main raw material, lumber, timber, and now it's back up. So I think the next year result, when it gets factored in, you will see a sharp margin decline.
Okay, so that's the view that's coming in on Century. Ashwin believes that next year probably there could be a margin decline on Century because of rising raw material prices. But Umesh and Avinash are rather bullish on Century for a longer perspective. Next stock, Just Dial. Once the counter was one of the bellwethers of the IT space, but now suddenly doesn't find mention. What's the way ahead for Just Dial? Is the story over for Just Dial? Let me start with you, Ashwin. I'll start with you only. Just Dial, is the story over?
Just Dial is a very interesting company. Earlier, they had a monopoly in SME business listings, and they had people's mind share. So everyone, that would be the first number everyone dialed was Just Dials. When data came up, people started looking on Google and stuff like that, and they lost a lot of relevance. They didn't reinvent them quickly. Like, the app came out later, the website was there before, but now basically they are like a Paytm mall plus Zomato plus like you can book appointments, you can do everything. But the crucial thing is, will they be able to gain consumer mind share again? Now coming to the company has 4 lakh paid listings and it earns around 20,000 rupees per listing, but the margin's only 10%. So the company earns 70 crores profit from the business, but it has 1,000 crore cash on the balance sheet on which it earns interest income of 100. So 60% of their profits right now are their investment income, so I think their success will depend on how they deploy this 1,000 crores. If they can redeploy it in a way to gain consumer mindshare, it's a great business because they have data of SMEs, that's their main asset. But apart from that, I think it's a whole. I would say it's a whole.
Avinash? Expensive, cheap?
No, I think Darshan, I think my sense is Just Dial has actually lost the battle in the data business, because in the older days Yellow Pages was there, then they came with their the Just Dial kind of facility. So to that point they were successful, but I would believe that now in the next couple of years, with the kind of free applications available, the way the Google is competing in the market, I don't think you're going to see earnings growth getting a kickstart at least for the next 2 years. And most importantly, as Ashwin pointed out, if you remove the cash from the balance sheet, the company has done 2 buybacks, but with growth missing, the market is still looking at uncertainty whether these growth rates would be sustained. Q1 has been good largely because of cost rationalization, but I don't think these measures are going to be sustained, because there's going to be a lot of money which has to be put back in the business. And to that extent, I would say that it's better to stay away from the business. We could see a little bit of negative surprise going forward.
Umesh, is it a structural problem for Just Dial?
Business model has lost its relevance for Just Dial. Earlier they used to list SMEs as a aggregator or as a portal, but now SMEs or all those companies are directly connected with the consumer either through the website or through the app. So that middleware which Just Dial was has become irrelevant, and in world of Google everything people can Google it. So I think structurally this model will not make money. But it's better to get out.
So okay, it's a neutral call from Ashwin, but it's a 2 thumbs down from Umesh as well as Avinash on Just Dial. They believe there are structural issues. And finally, and the most interesting stock, we left it for last, and that is Graphite. The company has been a marked outperformer in the last few months. Is there more to this rally? Umesh, is there more to rally, or is it enough now?
I remember a quote from Jesse Livermore: "No price is too high to buy." So that maybe is what graphite could be. Anyway, the structure really, I think the graphite prices, electrode prices are on an upswing, and it's reported that 50% of the Chinese capacity are down. Maybe because of that the prices are going up, but the biggest issue is what we think is this pricing will sustain high prices, because 75% of the capacity are controlled by 5% of 5 global players, and graphite being one of them. So I think on a larger term, on a longer term perspective, this industry will have triggers from EVA, yes, and second is electric vehicle. I think so. The battery component requires graphite electrode, and I think from there the big demand will come in next 1 or 2 years. So overall, we think this stock will outperform and will report good numbers. Currently, the numbers don't depict the increase in prices of electrode, but going forward, when they do come in, that's the time we will have a massive increase in profits, and that's the time again. So we think the engine will continue.
Will the engine continue, Avinash? Do you agree with him?
No, I think Darshan, this is going to be a price sensitive market, and I think as Ashwin rightly pointed out, pricing power currently definitely is there with players like Graphite India, because it's a supply shortage driven market, and probably the next couple of years, say FY 18 and 19, could be very strong years for the profitability, because clearly the kind of price points these guys are going to be negotiating going forward. As of now, almost 90% of their business is fixed price contracts, but the management has clearly hinted that in the next 2 or 3 quarters, when they sit on the drawing board, they are going to obviously negotiate for better pricing, and that would give them better spread. So I would second Ashwin's view that yes, over the next 12-18 months, if one were to look at a further incremental upside, that's possible.
What about you, Ashwin? Do you agree with the points, or are the risks involved to graphite now?
So I think this is a fascinating story right now at the moment. So if you look at it, it's a commodity, graphite. So the dynamics are based on demand and supply. So right now there's a supply shock in the market because China has banned exports of graphite. It's used in producing steel and lithium, as my colleague pointed out. So the problem is not for this pricing power to sustain. Even if there's a huge demand from electric vehicles, you would have to assume that new supply doesn't enter the market. And if it's a commodity, all it takes is capital to put up new supply. So if the prices remain high, more and more people will set up new factories. I can personally guarantee you the prices won't last this high longer than a year or two, and at current market prices, the stock is factoring in 5 years sustenance of current prices. So stay away and you save your money.
Okay, so that's the view that's coming in on graphite. Ashwin believes stay away from graphite. He does not think that the rally will continue, but Avinash and Umesh are rather bullish on Graphite India. With that, it's a wrap on Hot Money. Umesh, Avinash and Ashwin, thank you so much for joining in.
Thanks.
Thanks for watching Bloomberg.